Hey everyone, welcome back to Chipstock Investor. I'm Kasey.
And I'm Nick. What are we talking about today?
We're going to be talking about On Semiconductor today. Before we jump into the key points, I want to show you where On Semiconductor fits into the semiconductor industry, the integrated device manufacturers section. If you haven't caught it yet, we did a video on IDMs, specifically memory chip IDMs. We'll link that video right here. But today we'll be focusing on these three key points. We'll talk about the bloodbath that has happened with IDMs and especially ones that are focused on the auto and industrial sector, what our hope is for a recovery, and what onsemi has planned for the future.
And as we get into especially that third point Kasey mentioned, we're going to be adding Allegro microsystems to the mix here in the discussion. Primarily, we're focused on Onsemi, but Allegro is a company that got spun off of Sunken Electric, one of Japan's big industrial conglomerates, back in late 2020, and it's had a pretty rough go of things. Onsemi has actually fared quite well over the last 5 years. This chart shows the total return, so that's stock price plus dividends over the last 5 years, 157% total return, and that includes this latest leg down for Onsemi stock.
Before we continue, I just want to remind everyone to hit the subscribe button and check out our Semiconductor Insider membership. That membership gets you access to our Discord server where we have a lot of extra bonuses like live Q&As and all of our show notes with some added slides and extra details and content that you don't see here in the videos.
Including things like this. Here's a breakdown of our investments in the auto, industrial, and power and sensor semiconductor industry segment. Onsemi, microchip, and the fabless version of this, monolithic power systems, MPS, and then also our smaller bets basket. These are the companies that we have very small positions in, make up individually a very small portion of our portfolio, but that's because they're higher risk, but only potentially higher reward. Air Test Systems, Excelis, and late in 2024, we called out Allegro Microsystems as a timely buy in the low $20 per share range. But Kasey, as you pointed out, this portion of our semiconductor industry investments has been absolutely obliterated, especially here as of late with the added worry over tariffs, what's going to happen with the auto market, especially electric vehicles, with big tariffs getting slapped on that in the United States. Things are not looking great.
We've updated our end market chart a couple of times in the last year. Given the end markets that onsemi services, not just auto, like you think of Tesla, their silicon carbide chips, some vision chips for autos, but onsemi does sell chips to other industrial markets. We were really hoping with this diversified end market that we would see a much quicker recovery for onsemiconductor. But what we're finding is that all of these end markets have a pretty high inventory of their chips.
And how did all of this happen? We're going to show you our timeline of the 2020s bull market, or maybe our predicted timeline of the 2020s bull market, which we don't show very often because we always knew it was going to be wrong. But, here it is, and we'll show you where we were wrong. We talked about a possible excess in manufacturing capacity at the end of this decade, sometime by 2030, due to overinvestment in chip fabs, due to onshoring and friendshoring. Now, while that's not the case, especially in accelerated computing, TSMC can't build enough manufacturing capacity at the moment to keep up with demand from companies like NVIDIA. The very opposite happened for these IDMs like Onsemi that participate in auto and industrial. After the chip shortage in 2021 and 2022, early 2023, there was a lot of extra fab space that got greenlit for these markets. And now that fallout from that overinvestment has been moved forward to 2024. Thus, we've seen continuous announcements from Onsemi and its peers like ST Micro, Microchip being one of the latest that we've talked about recently over on Semi Insider, closing down some of that excess fab space, and it has certainly weighed heavily on profit margins. What is Onsemi's plan for coming out of this extended, very severe downturn for the IDMs.
Onsemi made this proposal to acquire Allegro Microsystems, and they've actually been trying to do this for quite some time. We have highlighted there that Onsemi has made numerous attempts over the past 6 months to enter into constructive discussions regarding a potential transaction. So what's the holdup?
More things that we've been talking about over on Semi Insider. Allegro Microsystems very abruptly fired its previous CEO and hired a new CEO. It appears that there has been some disagreement on Allegro Microsystems board of directors on how to handle these multiple attempts, these overtures from Onsemi. And this is probably the reason why the prior CEO was abruptly fired in February and the chief technology officer was promoted as new CEO. And shortly after that, Allegro confirms it has indeed received this unsolicited proposal from Onsemi to merge the two businesses together, all cash deal at $35 per share, which would value Allegro Microsystems at nearly $7 billion. In our opinion, that's actually a pretty hefty premium price for Allegro, which I think you'll see here in the following slides.
Yes, $7 billion does seem like a bit of a high price tag, considering that their revenue in the last year was under $1 billion.
Yeah, thanks to our friends over at finchat.io for help with this and the next couple of charts here on Onsemi and Allegro. So what we're showing you here is what it would look like if the two businesses were combined at this point. And you may start to scratch your head, like Onsemi, why in the world would you want to pay almost $7 billion for Allegro? Not only are they doing less than $1 billion in revenue in the last 12 months, but essentially zero operating income generated from Allegro as well. CEO Hussein El-Khoury and CFO Thad Trent, we've actually quite a bit of experience with those two. They used to head another company called Cypress Semiconductor back in the late 2010s before they orchestrated an acquisition of it by Infineon. This seems like, maybe on the surface anyways, not the norm from this C-suite team at Onsemi.
This is the valuation for Onsemi and Allegro on a 1-year forward price to free cash flow basis. Onsemi in blue, Allegro in orange. There is some expectation that Allegro will become more profitable in the coming year. And so Onsemi is thinking like combining these two businesses could definitely make for a stronger company going forward.
And you can see that in Onsemi's forward price to free cash flow metric. A lot of investors are going to look at this and see the below 10x 1-year forward price to free cash flow and just simply think, wow, this stock is cheaper than it's ever been in the last 5 years. And that's fine. That's a fine conclusion to draw. It's a true conclusion to draw. But really what we're seeing here is Onsemi making this switch from the last few years. They invested pretty heavily into their manufacturing base. And now they're saying, hey, we're in a downturn. We're going to pare back on investing into the fabs, into the manufacturing part of the business. And that's why there's this expectation that free cash flow will rise, which in turn drives price to free cash flow metric down. But instead, they're looking at making this investment in Allegro, which is now at this point, after some divestitures of their own, a fabless business. This is perhaps what El-Khoury and Trent are looking at. This is a Onsemi extra spare manufacturing capacity. Allegro makes these great power chips and magnetic sensing chips. Let's do a 1 + 1 = 3 type of situation by combining the two companies together.
Let's dig a little deeper into that valuation, especially for Onsemi. On a forward free cash flow yield basis over 10, tell us about that.
Yeah, this is calculated as the expected free cash flow generated by Onsemi divided by the current market cap. And by this metric, which we think is notable, free cash flow yield is a good metric to use for a company where dividends plus stock buybacks are a key part of the business's investment thesis. Not only is it expected to be a growth business, a profitable growth business over time, but they're going to return free cash flow to you, the shareholder or potential shareholder, via stock buybacks. And usually when a free cash flow yield gets over 5, 6, 7, that can be a pretty decent buy indicator if you expect the business to at least hold steady going forward. At over 10, this looks like a screaming deal, but really this could be the market saying Onsemi is crazy cheap right now, perhaps the best buy since the pandemic, March, April, May of 2020. Or maybe the market is saying this looks like a value trap, and we do not believe Onsemi is going to generate that much extra free cash flow in 2025 and 2026. Now that's, I think, where each individual investor needs to decide for themselves. But as for us here, I think we're more than happy having a position in both Onsemi and Allegro at this point, and would be pleased if Onsemi gets the Allegro takeover taken care of and done.
If you want to know more of our thoughts on this, check out our Semiconductor Insider membership, link in the description below. We'll be having a video out soon about monolithic power systems, another one in our power chips basket. Make sure you hit the subscribe button and have notifications enabled so you don't miss that video. And we'll see you again very soon at Chipstock Investor.
All right, this is one for the bloopers reel, I guess. What are you doing?
It's time for the mid-morning nap.
All right, I think it's time for her to do just that. Mid-morning nap time.
Okay, go to sleep.
All right.
Go to sleep.
Got to tell the people about Onsemi.
Go to sleep.
Okay. Slide number 1.